Hi, welcome. This is a Chapter 1 practice exercise. Somebody asked for some help with financial statements. I'm going to record this video walking you through preparing those financial statements. I opened up the Chapter 1 practice and then I just changed some of these numbers, so it's very similar, just different numbers than what you're working with. Fabulous Flora just completed operations. We have the following information. We want to now prepare the financial statements and then calculate return on assets. Anywhere that you can cell reference, you should. So we'll start with the income statement. And we always start out with the company name. If I can find it. Then we list the type of financial statement we're preparing. So this is the income statement. And for the income statement, we then list year ended December 31st. We'll do the same thing for retained earnings, but note that the balance sheet is a snapshot in time, so it just is December 31st. It's not year ended December 31st. So back to the income statement. The income statement is comprised of revenues and expenses, and revenues minus expenses give us net income or loss. So we'll start with listing revenues, and in this case we only have the one service revenue. And then we will say equals and come click on the 70,900 and press enter to pull that over. So after our revenues, we then list expenses, and we want to list those in order of the highest amount to the lowest amount. So the salaries expense is the greatest, so we'll list that first. Then rent expense is the next highest number. Then looks like insurance expense and utilities expense. And so just note that if you don't put these in the same order as I do, it might count you wrong in Acct201, but I would give you credit back for that. And so usually I catch those things on my own when I'm doing the grading, but if I don't, you can reach out to me and we'll get it worked out. So then I'm going to just continue on with the cell references to each of the numbers associated with these accounts. So then we have all of those listed, and we're going to total the expenses. So we'll do equals, sum, open parentheses, highlight these four numbers, close parentheses, and so now we have total expenses and revenues minus expenses gives us, in this case, a positive number, which is net income. Had this been a negative number, so we'll just change this to 50,000, you would see it in parentheses, and that would be a net loss instead of a net income. So change that back, we have our net income of $855. And so our statement, income statement is complete, and we can move on to the statement of retained earnings. Very similarly, we have the company name, the type of statement of retained earnings, and year ended December 31st. Then we always start out our statement of retained earnings with the beginning of the year, because this is showing how retained earnings has changed. So we start out with retained earnings as of January 1st, 5,200. Then, next we're going to add in the net income. I'm going to cell reference net income and the amount. Add those together for 6,055. If this were a loss, it would obviously say net loss and be a negative number instead of a positive. Next we list dividends, so I'm going to cell reference that. This number needs to be reported in the negative because that's the distribution of retained earnings or of equity. And so we'll say equals negative sign, click on our 4,800. And then when we add those together, we have ending retained earnings of 1,255. And I don't have retained earnings as of December 31st, so we're just going to have to type it. And again, Acct201 might say, you said DEC instead of December and count it wrong, but then I would come back in and award partial credit, or full credit in that case, because it's just a difference of input, but it means the same thing. So don't panic if you have that happen. Now we can move on to the balance sheet. Company name, balance sheet, and this is the snapshot in time. So we're just saying 12/31/24, not year ended, just that one singular date. Then we list all the assets in order of liquidity, which means how quickly we can convert them to cash. So cash is the first one. And then accounts receivable would be next, because that is anticipated to be paid as cash pretty quickly, like within the next 30 days. When we're looking at what we have here, office supplies would be the next one, and equipment would be the long term, so it would be last. I can just pull those numbers. If I can find them. And for total assets, we'll do equals sum, open parentheses, select all 4 cells, and close it off. On the right-hand side, we're going to list liabilities, and in this case, we only have one, which is accounts payable. You might have other things there, such as notes payable, bonds payable, interest payable, and similarly to being ordered in liquidity, we're listing those in what will be due the soonest. Then after liabilities, we list equity, and so that includes common stock. And if you remember the accounting equation, we took equity and we broke it down and said common stock, and then the rest of it was minus dividends plus revenue minus expenses. And that revenues minus expenses gives us income or loss. But then if you include dividends, that gives us retained earnings. So we could say common stock and retained earnings gives us equity, and that's what we're presenting here, the common stock and retained earnings. And I actually don't have plain retained earnings, I only have these ones with dates, so we have to type retained earnings. Retained earnings, we're going to reference over to our statement of retained earnings the ending balance of $12.55, and that's going to give us total stockholders equity. So we'll add together common stock plus retained earnings to get the total stockholders equity. This last row is total liabilities plus equity, so we'll take the total liabilities plus the total equity, and we get $32,050, and we see the total assets, $32,050, is equal to total liabilities and stockholders' equity of $32,050, and so that's good news because we're balanced, and that tells us that we've done the right thing. So that is preparing the financial statements, and if you need additional help, please let me know.